Hello, good evening. Our subject is auditing assurance, concepts and applications. We are now on lecture number 5. We will continue our discussion of audit of liabilities. So let's start immediately with our problem solving exercises. And this is about Karin Company. On July 1, 2020, Karin Company issued at 104 5,000 bonds of 10%, 1,000 peso face amount. So if you will analyze the first sentence, Karin issued at 104%, meaning to say the bonds issued by Karin Company is more than the face value, more than the face amount. What is that indication? There is an indication that the interest rate being offered by Karin in the market is higher than the interest rate being offered by other companies. That is why Karin has the right to issue the bonds more than the face amount. And the investors are willing to invest in the bonds issued by Karin despite the fact that the amount is higher than the face value. Because of the higher interest Karin is offering in the market. The bonds were issued through an underwriter to whom the entity paid the bond issue cost of 125,000 pesos. So I have already explained the meaning of underwriter and the role being played by underwriter in the issuance of bonds. On July 1, 2020, what amount should be reported as bond liability? Let's proceed. So this is the solution to Karin Company. So the issue price of the bond is at 104%. The face amount is 5 million pesos because that is 5,000 pieces of bond certificate multiplied by 1,000 peso denomination. That is why the 104% was multiplied by 5 million. So the issue price is 5,200,000 pesos. So the face value of the bond is 5 million pesos. That is 5,000 pieces multiplied by 1,000 peso denomination. And then we will present the premium on bonds payable. How did we arrive at the premium? We compare the issue price of 5,200,000 pesos with the face value of 5 million pesos. So we have a premium of 200,000 pesos. So what is the proper presentation of the premium on bonds payable? This amount should be added to the face value of the bonds. Therefore, we will also deduct, however, the bond issue cost of 125,000 pesos. So, the carrying amount of bonds payable that should be reported in the statement of financial position of Karin Company is 5,075,000 pesos. As we have said, in this particular scenario, the investors are willing to pay higher price just to acquire the bonds issued by current company that offers interest rate of 10%. Market interest rate is going down. That is why the price of bonds of current goes up because of the higher interest that it offers. As I have said, there is a presumption here that the 10% being offered by current company to investors are greater than to the interest rate being offered by other corporations in the market. So these are the journal entries in relation to the issuance of bonds by Karin on July 1, 2020. So we will debit cash because Karin received cash from the investors. That is 5,075,000 pesos, the amount that we computed in the previous slide. We will debit also the bond issue cost because it is Karin company who paid the amount, that is 125,000 pesos. We will credit bonds payable. The amount will be the fees amount of the bonds, that is 5 million pesos, and then we will credit the premium on bonds payable of 200,000 pesos. So the bond issue cost and the premium on bonds payable are subject to amortization based on the term of the bond. So if the term of the bonds is 5 years, the bond issue cost of 125,000 pesos shall be divided by 5 years. And the same is true with the premium on bonds payable. So, as we have said, assuming the term of the bonds is 5 years, that would be the what would be the adjusting entry on December 31, 2020 to recognize interest expense and amortization of bond issue cost and premium on bonds payable. So we will debit interest expense of 12,500 pesos. I will show to you later how we arrive at 12,500 pesos interest expense. We will credit the bond issue cost of 12,500 pesos. So this is the amortization of the bond issue cost. Another amortization on the premium. We will debit premium on bonds payable of 20,000 pesos. I will show to you later how we arrive at 20,000 pesos, and we will credit interest expense of 20,000 pesos. Here is the computation of the bond issue cost. The amount paid by current company is 125,000 pesos divided by 5 years multiplied by 6/12 because the period covered is July 1 to December 31. That is why the amount of interest expense that we debited is 12,500 pesos. And this is the amortization of the premium on bonds payable. That is 200,000 pesos divided by 5 years multiplied by 6/12. That is from July 1 to December 31. The amortization of premium on bonds payable is 20,000 pesos. So we can also prepare another journal entry for the payment of interest at the end of the year because according to the agreement, the payment of interest will be July 1 and December 31. So the interest expense that we computed is 5 million pesos multiplied by the interest being offered by Karin, 10%, and multiplied by 6/12, July to December. So the interest expense to be paid by Karin at the end of the year is 250,000 pesos. That is why we debited that amount in our journal entry. And then we will credit accrued interest payable of 250,000 pesos. This is the recognition of interest. Or we can prepare a compound journal entry. We will debit interest expense 242,500 pesos. We will debit a premium on bonds payable of 20,000 pesos. We will now combine the interest and the amortization of bonds payable and the bond issue cost. We will credit bond issue cost of 12,500 pesos, the one that we computed in the previous slide, and we will credit accrued interest payable of 250,000 pesos. So this compound entry reflects the amortization of on premium on bonds payable, the bond issue cost, and the recognition of interest expense at the end of the year. Let's proceed to another problem, and this is about Alisa Company. Alisa Company is authorized to issue 5 million pesos of 6%, 10-year bonds dated July 1, 2020, with interest payments on June 30 and December 31. When the bonds are issued on November 1, 2020, the entity received cash of 5,150,000 pesos, including accrued interest. The auditor noticed this material transaction during the examination of the books of accounts of Alisa. If you are the auditor of this company, what would be your recommended amount of discount or premium on bonds payable? So let's proceed to the solution to Alisa Company. So the amount of cash received by Alisa is 5,150,000 pesos as given in the problem. We will include the accrued interest from July 1 to November 1, 2020 because the bond was issued on November 1. So that is 5 million pesos multiplied by the interest of 6% multiplied by 4 months divided by 12 months, that is from July to November. So the accrued interest is 100,000 pesos. We will deduct. Why? Because we are working backward. The amount of cash received was already given in the problem. So since we are working backward, we will deduct the accrued interest from the proceeds of 5,150,000 pesos. Therefore, the issue price of the bonds is 5,050,000 pesos. The face amount of the bonds is 5 million pesos. We will get the difference. And the difference is the premium on bonds payable of 50,000 pesos. So this is the answer to this problem of Alisa Company. So these are the journal entry or journal entries on the date of issuance. So we will debit cash, 5,150,000 pesos. This is the proceeds received by Alisa in relation to the issuance of bonds. We will credit bonds payable of 5 million pesos, and we will credit premium on bonds payable of 50,000 pesos and the computed accrued interest payable of 100,000 pesos. So this is the journal entry on November 1, 2020, the date of issuance of Alisa Company's bonds. So we will now prepare adjusting entry on December 31, 2020 for the amortization of premium on bonds payable. And here is the computation. 50,000 pesos is the premium on bonds payable that we computed a while ago. Divided by 10 years, that is the term of the bond, multiplied by 6 months, divided by 12, because that the period covered is July 1 to December 31. That is why we multiply it by 6/12. The premium on bonds payable is 2,500 pesos. So this is the interest expense, 5 million multiplied by 6% multiplied by 2/12. Why 2/12? That is from November 1 to December 31. Minus 2,500 pesos, the amount of amortization that we computed above. So the net amount, the net interest expense is 47,500 pesos. Why deduction? Why did we deduct 2,500 pesos? Because whenever we amortize premium on bonds payable, we are crediting interest expense. That is why we deducted 2,500 pesos from whatever amount of interest that we computed, and we arrived at the net interest expense of 47,500 pesos. The journal entry will be debit accrued interest payable, 100,000 pesos. This represents the interest that we computed, which will be paid at the end of the year. And then we will debit premium on bonds payable. This is now the amortization of 2,500 pesos. We will debit interest expense, the one that we computed, that is 47,500 pesos, and we will credit cash 150,000 pesos, the total amount of interest paid to the bond holders at the end of 2020. So let's proceed to Elisa Company, another problem concerning bonds payable. On January 1, 2020, Elisa Company received 1,077,200 pesos for 12% bonds with face amount of 1 million pesos. The bonds were sold to yield 10%. Interest is payable semi-annually every January 1 and July 1. The entity has elected the fair value option for measuring the financial liability. On December 31, 2020, the fair value of the bonds is determined to be 1,064,600 due to market and interest factors. So let me explain the meaning of the fair value option. So Eliza Company decided to choose the fair value option in measuring the amount of bonds payable at the end of the year. Meaning to say, whatever is the amount of the fair value, that amount shall be reported in the statement of financial position of Eliza Company. Being the auditor assigned to examine bonds payable, you are mandated to ascertain correctness of material transactions pertaining to this account. So here are the questions. Question number 1. What is the carrying amount of the bonds payable on January 1, 2020? Question number 2. What is the interest expense for 2020? So we will do a lot of computation here. Question number 3. What is the gain or loss from the change in fair value of the bonds for 2020? And last question, what is the carrying amount of the bonds payable on December 31, 2020? We have 4 questions to answer. Let's proceed to the solution. We will start with question number 1, the carrying amount of bonds payable on January 1, 2020. So the answer is very simple. It is already given in the problem. It is 1,077,200 pesos because the company choose the fair value option. As simple as that. Question number 2. What is the interest expense for 2020? So it is also a simple computation, 120,000 pesos, because the computation is 1 million pesos, the face amount of the bond multiplied by 12%. So under the fair value option, interest rate is computed using the nominal rate. So in this case, the nominal rate is 12%. Question number 3. What is the gain or loss from change in fair value of the bonds for 2020? So the fair value on January 1, 2020 as given in the problem is 1,077,200 pesos. So the fair value on December 31, 2020, also this was given in the problem. It is 1,064,600. So we have a gain from change in fair value of 12,600 pesos. So let's remember PFRS number 9, it allows the measurement of financial liability at fair value, just like in our financial assets. So under the fair value option, the bonds payable is measured at fair value every year end. So how are you going to present the 12,600 gain from change in fair value? This will be included in the income statement of Eliza Company. This will be included in the computation of net income subject to tax. Therefore, the gain from change in fair value is also subject to tax. However, if the fair value is attributable to credit risk, the change is recognized in comprehensive income. There are some instances that there was a change in fair value, but it is because of the credit risk. In this case, if Eliza's bonds goes up, it is not because of the market behavior, but because of the credit evaluation. It so happened that the credit evaluation for Eliza is favorable. That is why the fair value increases. In that case, the change or the gain in change in fair value will be recognized in comprehensive income. What do you mean? The amount of gain, we call it unrealized gain, shall not be included in the income statement, but rather shall be treated as one of the comprehensive income. So let me illustrate. So supposing here is your income statement. You have your sales, you have your gross profit, you deducted cost of goods sold, you arrive at the gross profit, and then if that income is included in the profit or loss, you will immediately add the gain after gross profit. But in this case, it is recognized in comprehensive income, the unrealized gain in the change in fair value shall be added after net income before tax, or net income after tax, I mean. So after you arrive at the net income after tax, you will add the unrealized gain due to change in market value. It is treated as one of the comprehensive income, not included in the computation of net income subject to tax. That is the meaning of this particular sentence. The accounting rules for discount or premium amortization no longer apply when it comes to change in fair value attributable to credit risk. The last question: what is the carrying amount of the bonds payable on December 31, 2020? So, the carrying amount, very simple, whatever is the amount given in the problem as fair value, that is 1,064,600 pesos. That is the carrying amount of bonds payable at the end of 2020. So that ends our short lecture concerning bonds payable. We will continue our lecture next meeting. Thank you and bye-bye.